Crypto.com ramps up recruitment amidst revival in digital asset employment. In a contrasting trend to the broader financial sector's recent spate of layoffs, Crypto.com is back on the hiring spree, signaling a revitalizing pulse in digital asset employment. This comes as a refreshing pivot at a time when major financial institutions like Morgan Stanley are implementing significant job cuts across their investment banking sectors in Asia, particularly affecting Hong Kong and China. Morgan Stanley's strategic cutbacks in Asia. Morgan Stanley is set to reduce its workforce by about 13% in the Asia-Pacific region, excluding Japan. This decision will predominantly affect its operations in Hong Kong and mainland China, where the economic environment has been challenging, marked by a real estate crisis and uncertain growth prospects. The bank has indicated that these cuts are part of a broader strategy to streamline operations and adapt to the current economic climate. Impact of economic factors on financial sector jobs. The layoffs at Morgan Stanley are reflective of a broader trend within the global financial sector, which is currently experiencing a downturn in deal-making activities. This is compounded by strained US-China relations and regulatory crackdowns. Consequently, firms like HSBC Holdings plc, UBS Group AG, and Bank of America Corp. have also initiated job cuts, with even stalwarts like Goldman Sachs Group Inc. and JP Morgan Chase & Co. making significant reductions in their workforce in Asia. Compensation trends in investment banking. The economic downturn has led to a decrease in compensation for senior investment bankers in Asia, with many earning below the $1 million mark, a figure that was once considered standard for such roles. Bloomberg has highlighted that about 20% of managing directors at major banks did not receive bonuses, emphasizing the financial strain on the industry. Crypto.com's hearing as a sign of digital asset sector's resilience amid these challenging times for traditional finance. Digital asset companies like Crypto.com are capitalizing on new opportunities, suggesting a sector-specific recovery. Crypto.com's renewed hiring efforts indicate a bullish outlook on the cryptocurrency market and its underlying technologies, positioning the company as a beacon of growth in an otherwise turbulent financial landscape. Conclusion. While traditional banking sectors face downsizing due to economic pressures and changing industry dynamics, the digital asset sector, led by firms like Crypto.com, shows signs of robust growth. This divergence highlights the evolving nature of the financial services industry and underscores the increasing importance of digital assets in the global economy. As the traditional and digital financial landscapes continue to evolve, it will be interesting to see how institutions adapt and where the next opportunities for growth will emerge.